Well, hello, Matt. Happy Labor Day weekend. Kind of a close to summer here. Good to kind of kick off the fall now and lots of stuff to discuss. How's it going?
Good, thanks. Yeah, I had a nice long weekend with kids and barbecue and ear infections and all the fun stuff that you have as a young parent. But
Sure,
yeah, no, happy
sure.
to be here.
Yeah. Yeah, lots of news in the last several days to chat about. I mean, I guess first, before we gonna go into all the Tesla stuff, and we always like to talk about the macro market and sort of that includes crypto to me now. The macro market is not just like
Yeah,
equities, but it also includes cryptocurrencies. And there's a massive hit this morning. There's a massive spike. It seems to coincide with the El Salvador president announcing buying what 200 or 250 Bitcoin. I mean, that's not even that much for a country, like it's just like a
yeah.
public announcement of some sort. For a country, I'm sorry, for a person, it's a lot, but for a country, that doesn't seem like a whole lot, but
It,
it seems to have triggered something.
to me, I wasn't sure if that was actually a trigger or not. I mean, you're right that the volume, I mean, the dollar value there seems relatively small. I mean, also it's a buy signal, not a sell signal. So it seems odd to me that there'd be, this massive sell-off, kind of on the back of that news or that action. But nonetheless, it did seem to happen. I mean, there was about $10,000 of value of Bitcoin kind of wiped off in a matter. I think it was like 20, 30 minutes, something like that.
Yeah.
It's recovered a little bit since, but still down pretty sharply. But it wasn't just Bitcoin either. I mean, Ethereum was down. It was hovering around $4,000 recently. It's dropped all the way down to 3,000 since recovered. So not
Yeah.
all the way, but yeah, just kind of strange that you could see this kind of spike or
Yeah.
steep drop.
I think
Um,
it points to the illiquidity of cryptos. There's liquidity for the retail, but for institutions, it's not that liquid when it's sort of unexpected. I feel like all you need is one big whale. I mean, I think there's like 60 people or something, or 40 people control like a quarter of all Bitcoin or
mhm.
something. So if one of those people who owns like a outsized proportion of Bitcoin decides to sell their position or a substantial amount like pretty quickly, I don't think there's liquidity to really cover it. Prices, it dips really fast, and some people will scoop some up, 20 or 30% after a flash crash like that. But
Mhm.
it just, it's still early days of crypto, and it takes a long time for I think the liquidity to kind of be built up.
I think you're right. I mean, I think a lot of traders and investors tend to view crypto as very analogous to stock trading, but there are really important differences. I mean, there are not market makers in crypto in the same sense that there are in stocks, where kind of the sole purpose is to provide liquidity despite relatively large buy or sell orders. So you don't really have that kind of market mechanism to smooth out these spikes and drops. The other thing that has me, wondering a little bit, and Brett Winton talked a little bit about this, or had a nice thread on this as it relates to Ethereum, anyways, is the potential for over leverage, and especially in the NFT space. Now that doesn't explain Bitcoin, so I don't really think that's applicable here, but I do think it's kind of an interesting, um, anecdote or theory that applies to most of crypto, which is you have potential for serious over leverage, and especially when you get into the NFT space, where you've got more people kind of buying and creators, creating these assets without then selling the Ethereum for regular fiat currency. So I don't know. Did you get a chance to look at that thread, or do you have any thoughts
Oh
on
yeah,
whether
yeah,
that's a legitimate issue here?
yeah. I mean, I think the illiquidity speaks volumes here, especially when things are leveraged.
Hmm.
And the NFT thread, I think, was fascinating. The part that really clicked for me was when he described the kind of the formula. Like if someone creates an NFT, an NFT flower, and wants to sell it for $1 worth of Ethereum, right? Then
Hmm.
someone wants to buy it, so they convert $1 fiat currency to $1 worth of Ethereum first, and then they take that Ethereum and they buy the flower, which is worth $1 what they paid for it, and the person who sold the NFT flower now has an extra $1 worth of Ethereum. So it's like creating $2 worth of value in the Ethereum NFT ecosystem for one fiat US dollar in a
Yeah,
way. So that's
yeah.
sort of what he explained, and it sort of seem like, something seems fishy here, and I have to like really like dive into it. Still like a brain teaser to me, but trying to figure it out and how this is all going to topple. There's going to be some major crashes in the future. You just don't know when it'll happen, but there will be.
Yeah, I think there will, especially within the NFT space, and that's not a condemnation of cryptocurrency in general or Ethereum in particular. But I think you have a lot of people who have invested in these. What are these monkey ones? I can't even follow all these ones that are becoming so popular now.
Yeah, Bored Apes.
Bored Apes, yeah. These things are going up in value like crazy. So you have all these people who, on paper, are sitting on these huge gains, and these companies are. Or individuals are realizing some really nice valuations or paper valuations on their assets. But when you have a 25% crash in an hour, there could be a rush to the door, which would kind of evaporate all these paper gains. I mean, if there's a huge run in this space, there's not a good backstop on these valuations. It really is. Each one is kind of transactional at the current price, and if the value of the NFTs goes down or the value of Ethereum goes down, you could imagine that kind of spiraling out of control. So I think that's going to happen to some degree, and how the market kind of responds afterwards will be kind of a good indication of how mature that space is.
Yeah. I think a friend of mine was telling me the average price of the CryptoPunk was like $400,000 recently or something that was quoted around there. I think I've seen quotes of 200 something thousand to 400,000, but let's say it's 400,000 times 10,000 CryptoPunks. That means there's like $4 billion worth of CryptoPunks out there. Now, there certainly has not been $4 billion of, U.S. fiat currency going into buying CryptoPunks, in my opinion.
Exactly. Yeah.
A couple $100 million at the most on OpenSea worth of actual buying. And so if all the CryptoPunks tried to sell, I don't think there's any chance there's $4 billion waiting on the sidelines to buy it and take it off their hands. It's going to crash. Like, they'll be the first one or two that get that, average price of, $400,000, but pretty quickly it's going to come down 200,000, 110,000, 5,000, it'll come down fast. There'll be some people trying to get deals at low prices, but there's going to be a crash in a lot of these NFTs at some point. Cryptocurrencies have major crashes. Like Bitcoin has had crashed 80% like 5 times since I've been invested in it, and it goes down and slowly comes back up over time. The problem with NFTs is I think only a few of the NFTs will slowly come back. CryptoPunks might be one of them. Bored Apes might be one of them. I don't know, but there's certainly so many NFTs, they can't all come back. I think it's like the IOC, initial coin offerings, ICOs, initial coin offerings.
Yeah. Oh gosh, that fad! I know that was one I was rolling my eyes at the time. I was like, that's just not going to work. But yeah, it'll be interesting to watch on the NFT space in particular. I mean, that's one area where I think early adopters are really the only players in that space right now. It's not even really close to mainstream adoption. I think you do need more evolution of kind of the augmented reality or virtual reality space to become more prevalent, in order for the value of kind of these unique NFTs to really be more widely realized. And that's just not a part of it. Many people's lives right now. I could see that changing 5 years ago or 5 years from now. So maybe NFTs are durable, but you may need a couple crashes to get to the point where there's kind of broader acceptance and broader kind of market appeal, where you're going up to that next segment of customers beyond just the early adopters. But I think it would be crazy to expect anything other than a high degree of volatility from here on out.
Yeah, absolutely. Yeah. So I don't know. I'm tempted to. I have some thoughts. I went on a podcast last week and kind of sparked my investigation in crypto kitties. Those have been out for a while, but similar to CryptoPunks who have been out a while, they've come back and I don't know. Crypto kitties are kind of at a low, and maybe they'll come back one day. I don't think I'll figure it out and get a MetaMask wallet or whatever and do it, but it's kind of intriguing that maybe CryptoKitties, being at sort of a low point now, could make a comeback. Who knows? But we'll see.
Yeah, it seems like there's always something new. I had somebody direct message me the other day saying like, "Oh, we're doing a launch of Elon coin, and you can be one of the first ones if you like tweet it out to all your followers." Like, oh gosh, there's a new something every couple days, it seems.
There's new ideas out there, yeah. So yeah, next, Virgin Galactic. Did you see the news on that, Matt?
Yeah, so for those who maybe are not as familiar with what happened, so Richard Branson was 2 months ago, I think, had that flight right before Jeff Bezos, where he, took the Virgin Galactic spaceship, got up to the, right up to the edge of space, and had a successful landing, and everyone was kind of, happy with that. It was a first billionaire in space, great headlines. Well, apparently behind the scenes, there was some alarm that is supposed to never go off because apparently their trajectory was way off course and they risked not being able to land appropriately. The pilot, but we don't know if it was at the direction of Richard Branson or not, but the pilot ignored that warning, went on with the flight anyways, was able to safely land it, but it was, I think it highlighted a huge kind of risk for Virgin Galactic, not only with their system being so complex. To me, it kind of, I mean, they've got like an airplane almost. It kind of reminds me of like the Wild West days of like in the 1950s when they were testing all these supersonic planes, and like you just had these like super highly qualified pilots that were doing everything manually and like, shaking like uncontrollably with all the forces. But the point of, the way Blue Origin and SpaceX and most other companies in the space operate is that all these kind of like go, no go decisions are automated so that you don't have this type of bad decision, either intentionally or unintentionally, go forward. So to me, it kind of was eye-opening in that they have manual procedures, and so the FAA has actually grounded their spacecraft pending this ongoing investigation. But to me, it seems like very, very bad news for Virgin Galactic. I don't know, what were your kind of thoughts on that whole event and the path forward for Virgin Galactic?
Yeah, I mean, there was also some news of like some kind of like, quote unquote whistleblower at Virgin Galactic
Yeah,
who
yeah.
kind of complained about this and got fired apparently. So that's
Mhm.
really suspicious. But, you really have to dive in. I've learned from all the Tesla headlines over the years that, there's all these kind of FUD and smear campaigns. Although I don't think Virgin Galactic's a leader in many ways that people would really put resources to smearing them, so on that hand, I'm not sure, like, but I'd like to hear more about it, both sides. Virgin Galactic's defense, it some trivial like warning sign that went off that the New Yorker caught wind of and was able to make a big news story out of, or was it like a serious potential safety hazard? But it does point to the lack of automation, like you said, that I think inevitably is needed for efficient and safe travel to space and travel in general. Whenever you're
Mhm.
transporting big machinery, I think automation dispels human error, and that's the source of most of the issues is human error. So whenever you can take that out of the equation, that's good. And Virgin Galactic, we're no bulls on that stock. It's just in the headlines a lot. So I was just curious and it's in the space territory that we kind of follow. So it was
Mhm.
interesting to see this story for sure.
Yeah, and it kind of comes on the back of one of the comments Elon made recently. I can't remember in what forum, but he was talking about how at SpaceX they had their almost like a competition. It sounded like, to see if any human was actually capable of landing the boosters
Hmm.
for Falcon 9 manually, like through the reentry process. And nobody was capable. No human beings were actually capable of handling those maneuvers. The time frames are just so minuscule, and the reaction times are just, humans are just too slow at it. So the fact that I think the leaders have completely abandoned this kind of fly by wire mentality, where you can have super highly trained individuals handle that. Even docking with the ISS is done automatically now, with humans just as
Yeah.
backup. So to me, it just seems like that's going to be the future. We're seeing it with driving too, just start to take shape. I mean, reaction times for computers, everyone knows, are just so much better than what we can do. I think the challenge now is just how do you get the software in each application and the controls in each application to be up to the task that you need them to be. So I think that's a broader trend aside from just space that will likely continue in the future.
Yeah. Yeah. Yeah, and speaking of automated driving, Tesla, lots of news recently. I mean, Elon had that all hands on deck meeting, I think on Friday, was it? So the
Yeah,
market
Thursday to
really
Friday, I
hadn't,
think last week. Yeah.
Thursday, Friday, yeah, and we haven't had a chance to talk about that yet, but I mean, it's pretty, he knew obviously the details are going to get leaked out, but he's addressing his employees, and I think my whole point, I think in the meeting he kind of confirmed, and there was also that email where he confirmed, ARK's price target that Tesla could get to, $3,000 a share or something like that within a few
Hmm.
years, and
Yeah, by
so
2025, I think is that target date. Yeah.
yeah, and that's a 3 trillion market cap company, and I
Hmm.
put something out there on Twitter. It was like, yeah, I agree. I think we all knew this already. As if they execute well was the key, right? It's not a
Hmm.
given. They have to execute well, but if they
Yeah.
execute well, it's very possible, and it's including full self driving, very possible and almost probable in my mind. That they would by that time. And I think he's aiming. There's 100,000 employees at Tesla now, and that's crazy how big it's grown. But I think a lot of these employees don't really know a whole lot about the stock, and they choose.
Yeah.
I've talked to some people at Tesla before, and they've told me they've been educated by our channel and other channels like ours, and been very helpful. Just to get them and other employees they know that are to watch it get educated on Tesla's bigger mission instead of being stuck in their kind of tunnel vision role within Tesla. But he says a lot of a couple of people have told me a lot of people at Tesla actually don't choose the stock compensation. For example, they choose the
Oh, really?
cash compensation at the end of the year. To me, is kind of crazy because you get a little bit of a better deal, I think, with the stock compensation. But instead, you're like, oh, I'll just take the cash now and get paid out in cash. And if you can afford it, I think the Tesla stock all the way. So that to me just signals that there's a lot of employees that don't really understand the magnanimous vision of Tesla still, like 100,000 people is a lot of people, so I
Yeah.
think it's good for him to kind of put forth that vision to all his employees so they hopefully understand it.
Yeah, and I was thinking, there could be. I haven't heard any reports of this, but you could imagine a situation where there's some line worker who was hired in 2018 that had their stock-based compensation go up 10x, and they're sitting on like a pile of wealth that some new employee coming in at the same job, it's much harder for them to kind of imagine going 10x, from where we are right now at $600+ billion market cap. So I think kind of laying down the foundation that there's still a lot of upside to go from here could be helpful in kind of enabling new employees to get the sense that they have not missed the boat. That there still can be kind of wealth creation opportunities for Tesla employees just by kind of sticking with the company and executing well while they choose the stock-based compensation plan. So
Yeah,
I'm not
yeah,
sure that was the motivation, but to me it seemed like a logical thing that Elon might be trying to communicate.
yeah, just to get improve the morale too of all the employees. But a benefactor will be that the employees, hopefully more of them would understand how valuable a stock choice for the compensation would be versus cash in the future if they execute well. So, it's a big end of quarter push. He tends to hold these rallies or whatnot a lot of times ahead of some push, or sends an email out to all hands on deck. Let's push it for the
Hmm.
last few weeks of the quarter. So it's also bullish to me in a lot of ways for the end of the quarter. I think, 200 record deliveries again, obviously. Just by what margin is it going to be? 220,000 deliveries, something like that, like Troy Tesla kind of projects around that, or is it going to be 240,000, like some wild card out of China, and they deliver an extra 20,000 no one ever saw coming? I don't know. But I think the floor is, I can't see them delivering less than 210,000 this quarter, but we'll get more
Right.
estimates soon, I'm sure.
Yeah, I think that's true. It's yeah, it'll be interesting to watch though, and this quarter more than most, I'm really interested to see their gross margins. I mean, last quarter was such a surprise on their automotive gross margins, and they achieved that despite relatively low credit sales, and there was still kind of a lot of ramping that was going on. So. Yeah, I'm just really curious to kind of see how that pans out. It'll be another month and a half probably until we actually see those results. But man, I'm getting very excited to see the financial implications, and then looking forward even to Q4. Elon seems to kind of be betting the farm a little bit on full self-driving. We'll have the beta 10 release going on this Friday night. Then he was saying 2 weeks from then, kind of the notorious button might be available. I'm kind of holding my breath on that promise, but that kind of coupled with the news that I think came out in that same meeting that the $25,000 vehicle is not going to have a steering wheel or accelerator or brakes. Like they're just going to basically kind of bet that full self-driving will be capable of handling it at that point. So he does seem, you start putting these little clues together of, like confidence on this new release, that little fact about the vehicles, the $3,000 stock price if we execute well, and it seems to me that the confidence level in FSD is increasing right now.
Yes, I would agree. I mean, Elon was a little unimpressed with 8.2 or 8.1 or something full self-drive, but he's talking up this new version that's about to come out. And it's going to be really eye-opening this Friday night, I guess, after people download and start driving it to see, how it does. It's this Friday, right? I think is when the new
version it's this Friday. Yeah.
And then the aim is like another version 2 weeks later that is capable for public release potentially. But that's the aim. It could be, several weeks later. We'll see. These things always, like Zeno's paradox, keep stepping even a little closer, but we're closer and closer. It's just hard to know. You don't know, we don't know for sure. So there was also the billionaire on Twitter, Leo Kogon. I don't know. I'm not sure I'm pronouncing it right, but Leo Kogon. Is that how you pronounce it, you think, Matt? I'm not sure. But
Koguan Leo, yeah. Okay. It's hard because the last name goes first in traditional Chinese, so it seems like Leo is probably his last name, and then Koguan is his first name, but I'm not certain. Sometimes Chinese people switch it around when they go in English, but anyway, sorry, you can kind of keep going with that, but it's very interesting.
Yeah, he said he's buying another 1 million shares. He said he already says he's the third largest individual investor of Tesla. So he's behind, I assume that means behind Elon Musk and Larry Ellison.
Yeah.
Right? So
I would imagine that's the two.
I mean, yeah. So now he's going to have an extra 1 million shares. So that's a pretty big statement there. And he followed up later in the weekend, confirming it and like, that's what I said, what I mean, basically. And I don't think people are talking about that enough today. And part of the price, Tesla's price is up, $20 last I checked, $17.50 right now, over 2%. I think, if you're buying 1 million shares of Tesla, in the market, you're going to move the price significantly. There's liquidity out there, but and you don't buy, people wouldn't buy that all in a market order all at once, or would spike the price. But it would be like an algo order over the course of a day or maybe a few days. I don't know, but that's going to move the price up. I remember several years ago when Larry Ellison put his position on in Tesla, the price moved up substantially. I mean, that was way back when Tesla was like a 30 or $40 billion market cap company, or maybe 50 billion market cap. But he bought, 1 million or a couple million shares of Tesla kind of on the open market, I think, way back. And that really moved the stock up, 10%, on that news even alone. So many people pile on when they find out like, hey, this multi-billionaire's buying Tesla, let's get into, so there's a lot of kind of follow-on momentum with that too. So the news hasn't really broken a lot about this yet, though. I haven't, on Twitter, there was a Twitter thread, but I haven't seen any headlines about it at all.
Yeah, and I think a lot of people were kind of skeptical of this guy in general because he has some, views on Taoism and things that are kind of outside the realm of kind of normal Western investor philosophy. So I did see kind of a lot of people saying, I don't take him too seriously, but judge him by his actions, and I think his net worth, you can never really trust these things you see online as net worth, but I think his net worth is only about 2.1 billion from what I saw. So if you look at it as a percentage of his total wealth, he's really kind of betting the farm on Tesla with this 1 million shares plus his original position. So seems to me that there is a high degree of conviction for him, and like you said, will create a little bit more upward price pressure. Just as kind of more shares become unavailable for purchase as long-term holders kind of have them. I mean, we saw this to a much greater degree, to be sure, but with S&P, when you have buyers come in that are no longer going to be selling those shares, you're essentially taking those shares off the table for trading. So yeah, I think it's a really good signal. I mean, we're kind of getting, I don't know if you're getting the same sense, but it seems as this year has kind of progressed, there was a feeling that maybe the stock had gone too far too fast, and we saw a nice correction down to, not nice is probably the wrong adjective, but saw a correction, and now it seems confidence is kind of coming back, and people are saying, oh yeah, we could see a price in the $1,000 range. We could see a price even in the $3,000 range. I think there was some analyst report that came out today with a price target of over $1,200. I think it was a bull case target of over $1,200. So it does seem that there's a corner someone has been turned in people's minds, where they're seeing that the current price might be a little bit too low for kind of where the company's going to execute.
Yes, no, I agree. I think there's more people realizing how far ahead Tesla is from the competition when you see GM Bolts all get kind of recalled, and you see self-driving car startups, the CEOs leaving with Waymo, or it's just the signals are out there. People are putting the breadcrumbs together that, hey, Tesla really is the leader in this stuff potentially, or it is the leader in EVs and potentially in autonomous driving. And it's just a slow kind of snowball effect. And the macro markets certainly help, low interest rates, and I think S&P is up like 20%, record highs. So the macro market is cooperating, obviously. So we have the best, storm, weather from that perspective, in the environment for, investing on growth stocks. So, Tesla did come up dramatically. I still think it could be range bound from, 800 to 400, ultimately, until self-driving really comes to fruition. But hopefully that'll be a few weeks away. Maybe people all kind of consensus among the Tesla bull. If consensus is among the Tesla bulls first, that, hey, full self-driving is so legitimate, it's like really here to stay now. Like Tesla is robo-taxi capable, even though it's not legal yet, it's capable. If that's the consensus among Tesla bulls after the release in a couple of weeks, or a couple of weeks from that, then I think the stock could really hit the moon pretty quickly. But there has to be that kind of consensus among even skeptical bulls, like Very Black, so we'll see.
Yeah, and I think even the Gary Blacks of the world kind of give credit that FSD is a feature set that people will pay for. So even if FSD is not so good that people believe that autonomy is capable, I think the catalyst could be you have it. Let's just say it does happen in 2 weeks' time that this goes into wide release. I mean, I'm going to be dying to show people, like all my neighbors and everyone, like what this actually can do. And I would imagine there's no small percentage of people who will, order a Tesla at that point, kind of after seeing that functionality of what it can actually do, assuming it's kind of as Elon is advertising. Then on top of that, you've got the potential for FSD subscriptions from current customers, or people just buying FSD outright. So you've got a lot of kind of significant order and margin catalysts potentially coming out of this, depending on how good it is. So yeah, I think there's going to be, I think there could be kind of potential for a correction downward if it doesn't really deliver, or if it gets delayed again a couple months. But I could also see it, the stock jumping up if this is kind of as good as Elon is hinting.
I agree.
So we'll be curious to see which way it falls.
Yeah, absolutely. So yeah, I mean, anything else to talk about with Tesla between us? I mean, I think we talked about a lot. We'll certainly take questions, but anything else you wanted to cover with Tesla first, Matt?
No, I think we're almost half an hour into it, so I think we can move on.
Yeah. All right. So Alec, would you mind putting up, I guess, some questions? We'll start going over them. From Stocks with Sanj on Twitter, what are your thoughts on Peloton's latest price cuts, bullish or bearish for next year? Matt, you have any thoughts about that?
Yeah. So I think it's bullish, honestly. I mean, I think Peloton has a little bit of a Tesla problem, in that they kind of appeal to higher income individuals to kind of make their business case work at the outset. But they really do benefit a lot from scale. I mean, just the fact that you've got a handful of instructors and then you've got I don't even know how many customers they have right now, but I would imagine it's in the millions. But so you've got the ability to kind of amortize a relatively small base of costs over a large client base. So I think it's kind of natural that Peloton needed to have some price cuts, because I think they're just where they had been. It was pricing out a big chunk of the market. So I think it is bullish for continued growth, but you kind of need to see that price cut have a commensurate drive in volume to have it really pan out. But I think time will tell on that front.
Yes, I think the subscription revenue they take in is really their bell cow, and they're just trying to get the units out the door. Sort of like Microsoft selling Xboxes. Trying to sell them at a loss, even just to get them in people's houses, and then people pay up for the games or the subscriptions.
Yeah.
From Stocks with Sanj again, Zoom sold off a lot on earnings report. Are you still holding options for SPY inclusion? What was your take on the earnings report? Yeah, I mean, we sort of Matt and I talked about it, and we think Zoom is a great value company. We like the stock a lot. S&P inclusion, we think might not be as imminent as we were hoping early on. I think it'll be included in the S&P at some point. I just don't know if it'll be this year, next year, or the year after. They have some, I think, share class potential obstacles. It's at the discretion of the S&P committee to some degree. So that might be the delay there. But I still think Zoom is a great long-term play. I think it's here to stay. I think Microsoft Teams is a competitor for, enterprise stuff, but I think Zoom's kind of making the right moves to kind of be a household name and be more, widespread as it is already on phones and so forth. So I'm really looking forward to this Zoomtopia, they're doing next month, I think, where they kind of put out their vision, their updated vision of what their future is. Did you have anything else you want to add, Matt?
No, I mean, I think we talked a little bit about this. I believe it was last week, but it seems the market was really concerned about the kind of lower guidance on growth rates going forward. In my mind, and I think in our minds, the sell-off was kind of overdone to the relative to kind of the core news they were delivering, especially when you consider just how they kind of knocked the estimates out of the park for that particular order. So I think it's pretty clear that there's not going to be S&P inclusion. I think there was actually a new list of 3 or 4 companies that were added, which was announced late last week. So we're not going to do any more kind of S&P inclusion plays, but we do think that there's some. We think it's at potentially a local low, I would say.
Yes. Mm-hmm. Next question from DanMac51 on Twitter. Another Beth Kindig article, bullish on Fubo and conversion of streaming sports and live gambling. Thoughts on this trend? That Beth Kindig, she seems like a kind of a generalist, pretty smart on general trends and the general tech stuff. But as I mentioned the other week, when I heard her talk about self-driving and referencing details of Tesla self-driving, like in a very confident manner, it made me very skeptical on everything she says. She mentioned that 5G connectivity is necessary for Tesla self-driving, and just mentioning that just kind of triggered something in my head. Like, I can't believe anything that this person is saying if I feel they're so wrong on something like that they seem so confident in. So just in general, bullish on Fubo. So I would take the fact that it's her commenting on it and just phrase the question: am I bullish on Fubo and the conversion of streaming sports and live gambling? Fubo is interesting. I remember their stock got really hot a little less than a year ago, and I was tempted to get into it a little bit, and I realized the stock went from like 20 to 60 really quickly. It was like one of the highest shorted stocks, and it's come back down to around $30 a share. I forget the market cap exactly right now, but I think their vision is very strong, but I think I read some like bearish reports on it at the time, which kind of convinced me that maybe I don't know the whole story of Fubo's success. But basically the gist was the regulatory environment worldwide is complicated, and it's going to be a monstrous kind of struggle for Fubo TV to Fubo to offer like live sports betting on mainstream sports globally. There's all these different jurisdictions for online, not just state by state in the US, but globally. And Fubo's trying to be a global kind of online sports. Maybe in some countries it's working out okay, but for the market cap that is trying to justify, it seems like it really needs to be a global business for the most part. And that just seemed like a big headwind I wasn't prepared to kind of dive into the swamp on and try to understand better. So I think in the US, at least, you have competitors kind of already working on this. DraftKings is a big one, obviously. And I know a lot of people love DraftKings. And I just don't know what Fubo has in the US that DraftKings isn't ahead of them on, to be honest, or can't get ahead of them on quickly. I don't know enough about Fubo's management. I haven't really dove. Maybe there's some instrumental CEO like Elon Musk of sports betting at Fubo. I don't know. That's possible. But if that's not the case, I just don't see how they can be so dominant and justify the market cap they're at, sort of. Matt, have you looked at Fubo at all, or what are your thoughts?
No, not too much. But this space has been really heating up lately. I think I've seen Caesars is getting really aggressively into kind of this space. So I think what you're seeing is you've got a lot of the incumbents which are kind of going aggressively into this space and kind of offering a bunch of products. So I may have a bit of a Luddite opinion about this, but to me, kind of the entire space is a zero-sum game. I mean, you're essentially taking gambling where the house wins, and there's going to be some kind of competition among all the different providers that will I think drive pricing down to some point where it's sustainable for whoever wins, but not highly profitable. Otherwise, the customers would go somewhere else. So to me, it's just the whole this whole sector is not particularly attractive, just because you're kind of I don't want to paint too negative a picture of it, but there are some people who have gambling problems, and those are your top customers as one of these entities. So to me, the whole space is not entirely attractive. I'm sure there will be some winners in this space, but it's not one that I'm very interested in, to be frank.
Yeah, it reminds me a little bit of the craze with the marijuana stocks when marijuana was becoming legalized in the US and such, that some of these stocks really got hyped up big time, and it's sort of a commodity. Once you kind of build out the technology for the live sports betting, it's sort of a commoditized technology that's not hard to reproduce by other companies. Once you get the regulations passed, like you said, the major casinos are probably already building this out too. And I don't know what's going to differentiate one from the other to make it valuable. Like Fubo, the name, everyone talks about it for a while, and maybe there's something special about it. We don't know, but yeah, it seems like highly a commoditized new kind of space that will be a big industry, but I just don't know if it's gonna be like one stock that takes all or something,
Yeah, that's a good analogy though to the marijuana stocks, where some of them are going to have tremendous top line growth for the next couple of years, but where it shakes out in the long term, I think you're going to have kind of a low margin space that it's. I'd rather get into something that's way more asymmetrical on the upside than gambling.
Yeah. From Miranda Reddy, do you think Tesla has a problem with ramping production of 4680 cells in large scale, as Elon announced that Cybertruck and Roadster are effectively postponed to 2023? I mean, I think the 4680 cells are really a huge key to Tesla's success and execution and future. I don't see anything signaling a problem with the ramping. I think they mentioned on their earnings call there's engineering issues that are working out, but nothing's not solvable by good engineering. They felt pretty confident on that, and so I'm going to have to go with that. I don't, until that something proves that otherwise, I kind of have to go at their word on that. And maybe just instead of a year, it takes 18 months or 2 years to really ramp up, from battery day. So I don't know, Matt, do you have any thoughts have you read anything more recently?
Yeah, I mean, I might take a little bit of a dissenting viewpoint there. I think at least as it relates to what was kind of originally talked about at Battery Day. So if my memory serves me right, I think they said they were trying to kind of do a different iteration at that Cato Road facility every 2 or 3 months. and they were thinking it would be, 3 or 4 iterations, and then they'd kind of be ready for large scale manufacturing. So if you do that math, they should have kind of been ready at least to figure out what are the right pieces of equipment that they need to handle the large scale manufacturing of 4680, like right about now. So it seems, for whatever reason, that it seems pretty clear that they haven't solved those problems yet. So I do think there's a delay in when Tesla is going to be implementing 4680 relative to when they were initially thinking of Battery Day. So that if you go with the presumption that you don't want to redesign Cybertruck or Roadster, for example, to use kind of cylindrical cells or the existing cells before 4680, and then like 6 months in do a whole design change, then I think there's a logical case to be made there that I think the 4680 delays could be resulting in a delay to Cybertruck. So I don't know that necessarily is what's happening, but in my mind, there's a kind of clear prioritization of getting Model Y up and running first. And then maybe that buys enough time to kind of figure out ramping that product both in Berlin and Texas, where hopefully by then Cato Road has solved these problems and you can just kind of replicate that line in those 2 sites. So to me, I could see that being the case, but I'm not 100% certain.
Yeah. One line that stuck out for me, I remember from the earnings calls, is that Elon mentioned they have sort of like a Baskin Robbins assortment of batteries. And I just remember that line. It was just like, yeah, you know what? There's like 5 or 6 different types of batteries now I'm trying to keep track of. And it's growing. It seems like every couple of weeks, a new style or whatever, chemistry or form factor combine, these iterations. And I think he really wants, just like the 1 or 2 or maybe 3 types of batteries, and the 4680s, going to be a major part of that, maybe by far the biggest, most common form factor. Then they only need like 1 or 2 other. So I think he wants to keep it simple again. It's getting complex and out of hand pretty quickly with so many different types. So I think it's still a top priority to get this 4680 cell down, because then you could really simplify the flavors of batteries you build out and mass produce it much more efficiently, with using Wright's law, as my t-shirt says, from ARK Invest. I don't understand this formula, by the way. I understand the concept of Wright's law, but I don't understand the variables, the y and a. I haven't studied it, but
I just remember that from arithmetic, where with the slope of a line is y equals ax to the b. I believe that was what it was, but I was always terrible at math, so.
Yeah. So if they get this, it'll slant. They'll produce a crap load of those, and the cost will come down dramatically to kind of where they envision it, and maybe even lower. But they'll be able to do so many tremendous things with batteries going forward once they do that.
Yeah, did you see his comments too? The limiting factor had a good kind of tweet on.
I saw that. Yeah.
The debate on what's like the right chemistry, and that was really helpful. And Elon responded to that, talking about kind of the benefits in most cases of having an iron phosphate battery, where nickel gives you better performance, but just based on kind of economics and limited supply, you only want that for like kind of your top end products. And kind of the one thing that he said is really just a bad idea is pouch cells, which is like what the rest of the industry is doing.
What everyone else is doing, yes.
Which, if you look at the bolt fires, and it kind of makes sense, right? I mean, if you got like a bigger mass, that's where it's harder to get the coolant to the center of the cell. That, of course, that makes sense. That you'd have the potential for kind of runaway fire risk. More so in a pouch cell than in a cylindrical cell, where there's kind of a more even distribution of the cooling. So I thought that was really interesting. I'd encourage anyone who hasn't seen that, check out that tweet that Elon replied to for the limiting factor, because there's a lot of good commentary on kind of the philosophy, Tesla's philosophy of batteries.
Yeah. Interesting comment, by the way, from Aaron Kenzork on the YouTube live chat. I think it says, "I've worked at the cannabis industry for 8 years. Complete race to the bottom." So anyway, that was an interesting comment. Someone who works in the industry for 8 years who's saying, it's a highly commoditized business. Basically, it's just squeezing margins to nothing. And, that's my suspicion, at least, of what, is entailing the race to the bottom. Anyway, next question. Krishna says, what are your thoughts on using artificial intelligence for underwriting insurance and loans like Upstart? Yeah, Lemonade's talked about using their artificial intelligence. AI means so many things. It's such a generalized term. I kind of hate that term these days. But insurance is using, certainly they're apparently building out some crazy algorithms to detect more efficient underwriting efficiencies and in a very automated way. So yeah, I mean, it seems like it's promising. They've sort of gone big on it for a while, and they talk about it a lot. And I think their founder, co-founder, Shai Winiger, he's the guy who kind of built Fiverr, and which is a huge success. And so I think he's at the forefront of that. And we'll see how it develops in the next few years. But I'm bullish on it. At least in the case of Lemonade. I don't know enough about Upstart. I know there's a lot of people that love Upstart. Should really study that. Stock's been really tearing it up lately. But what do you think, Matt?
Yeah, I completely echo everything you're saying. I think as it relates to this one narrow kind of application of AI, I think that the benefit is that there's potential for kind of recursive improvement, which you almost certainly don't see in the kind of traditional insurance space, where you have underwriters, essentially they've got their models. In fact, I remember when I was doing valuation, one of my jobs I had to do was to value this life insurance product. So I was actually kind of getting the tables, the published tables of life expectancy and kind of what's the probability of death in each year, and getting like an expected value of the insurance product as a result of that. And so then, you will have, those will be updated over time just as you kind of get more actual data in. But what you don't necessarily have is, why was the initial projection wrong? So there's not that kind of recursive self-improvement aspect in the way that the current insurance industry underwrites risk. And that's something where I think having dozens of variables that you're assessing risk based on and kind of recursively improving those, I think will result in better underwriting ultimately. There's going to be some asymptote, kind of above which you don't get marginal returns on kind of your product. But I do think it'll be a better way to do it than the way it's done right now. So I do think these companies that are using that most aggressively and most intelligently will probably end up being winners in the space.
Absolutely. Next question from JB. Emmet mentioned Interactive Brokers Probability Lab as a helpful tool for options in prior interviews. Any other IB tools you recommend for identifying optimal contracts? Yeah, I mean, the Probability Lab is great. It kind of gives you what the market is pegging the probability of a stock getting to a certain price by a certain time, based on the options, current options pricing in the markets, which is usually driven by the Black-Scholes formula or some derivative of that. So that's a great tool. Within Interactive Brokers, there's this. I think we've talked about it before. There's this Risk Navigator tool, and within that there's like something called a what if portfolio you can create, and then you can put in like hypothetical positions and hypothetical options positions you're considering, for example, in positions. And then within that you can do something called a custom scenario, and where you can say, okay, that's the value of the positions today, and in the custom scenario side, I'm going to say in the future on this date, 6 months out or a year out or 12 months out, 18 months out, if it's a leap, for example, I think the price of those underlyings will be this or this. It'll go up by this much or that much. And you hit a button, apply, and it calculates what the value of that portfolio will be at that time in accordance with those metrics you type in. And people can do that with spreadsheets. I know a lot of people do it with spreadsheets. I just found once you learn the Risk Navigator tool with Interactive Brokers, it can be very helpful for me to do it that way versus a spreadsheet. But there's also lots of risk tools within Interactive Brokers Risk Navigator, and I'm sure there's other options tools people use that they love from other brokers. That's just what I'm familiar with, and I've learned, and so it works for me. And I think there's all kinds of other analytics tools of options within Interactive Brokers. That's just a couple of them, but those are the ones I like. But yeah, there's a lot to learn about options. You can go really deep into options like pricing and theory. Yeah, I know. I saw a question earlier about Frank Peeling, about his updated metrics or paper on options. And I kind of skimmed through. I haven't bookmarked it on my Twitter, and I sort of skimmed through some of it. It's pretty long and in depth. But what I saw, I think at some point, was that he was looking. I think he's tempted to buy, or more recently was buying like deep in the money call option leaps. And that's not, that's not something I like. I don't like that risk reward personally. I'm sure he has great reasoning for it in his kind of blog post there. But, like we've sold deep in the money puts instead. We think there's a better value when it's range bound to sell that, and maybe buy some out of the money calls at the same time. So we've talked about that in depth in past episodes. But Matt, did you happen to see Frank Peeling's blog post? Did you read it yet or not? It's kind of long.
Yeah, I saw. Yeah, Frank's great. I love his analysis, but no, I've not set aside the 3 or 4 hours I'll need to kind of get all the way through his stuff.
Yeah.
So no, I've got it bookmarked on my Twitter feed, but I need to get back in there to really look at it. But no, I'd highly recommend it. Anyone who's not familiar with him, check him out on Twitter. He's got some really great analysis, and he's been spot on in the past.
Yeah, he was very helpful, especially during the S&P inclusion. Helping him and Truth Tesla or Tesla Facts on Twitter, for example, both really exposed a lot of metrics to the Twitterverse about the S&P inclusion statistics and projections and such. So he really does do great deep dives on Tesla options.
Yeah.
From Tesla Act, it seems like a lot of people are waiting to pull the trigger on Tesla Solar, including myself and friends, but waiting for a further price drop. What's your point of view of this? I don't know. Rooftop solar, the price has increased, and there's still high demand. People I've talked to not too long ago said they're trying to get orders in, but it's like a long wait list, at least where I live, for the Tesla roof solar. But I think the sooner that someone pulls the trigger, the better. Energy prices are not going down. At least in California, they're going up. And then the fires and being cut off from power, all the more reason why you want to have your own kind of self-generating, utility for your house. What are your thoughts, Matt? This is kind of your expertise, I guess. What's your thoughts?
Yeah. So I do think we're going to see some price drops in the future. I could be wrong. But with solar roof in particular, I mean, the price increases there were really, really kind of hefty. I think it was like, depending on what type of roof you're offering or you're looking at, I think it was somewhere in the neighborhood of like a 30% price increase recently. Now, maybe that was kind of necessary for Tesla to kind of maintain their profitability on that product. But if you look at their financials in Q2, they were right around break even on energy. Which they've always kind of run that at a -5 to 10% loss. So in fact, they might have even been positive 10% now that it's been a while since I've looked at it, but the largest gross margins on energy that they've had to my memory was in its Q2. And they still haven't scaled up solar roof. If you remember Elon's comments from a couple of years ago, they're trying to ramp solar roof to 10,000 roofs a week. And I don't know where they are now, but they're nowhere close to that level. So I would imagine when you get to the point where you have that many roof crews that are capable of doing the work, that you will have some improved efficiencies, which will allow for. I don't think you're going to have 30% gross profit on solar roof. I think instead what you'll see is kind of prices come down to the point where more customers can buy them. I really want a solar roof actually, and I was looking at putting one on, but the price, including the power walls, was around $100,000. So I'm thinking that probably isn't economical for me to do right now, and I'd rather kind of wait until I need a new roof and kind of hope that the prices come down, 25, 35% at that point, back to kind of where they were saying it was going to be originally. So I could be wrong, but I think utilities for sure are going to kind of continue to increase their rates going forward. And I'd love to do kind of a whole deep dive on that at some point, kind of explaining how flawed their business model is. But regardless of what happens, utility rates will continue to go up, which will make kind of installing your own distributed solar more attractive going forward, just because you're fighting against a non-competitive monopoly.
Yeah. 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 Good feedback, Matt. Thank you. All right. From Alex B. Lemonade short interest of 24% float is a bearish sign or rather bullish for you. I mean, I think there's a lot of people that think Lemonade isn't doing anything too different than other insurtech plays, and I think those people are wrong. And so that's where a lot of the shorts come from. I think it'll still be a highly shorted stock. I mean, I think I'm looking at Interactive Brokers. Another useful thing in Interactive Brokers shows you the borrow fee and the utilization rate. So, there's and how many shares are available to short. So if you want to short Lemonade, it's 593,000 shares available to short on Interactive Brokers at a 0.94% borrow fee. I've seen that borrow fee as high as like 20 or 30% or higher in recent months, actually. So it's come down quite a bit. But the utilization rate, which means if you're long Lemonade and you participate in their automated stock lending program, that means what percentage of those shares are actually being lent out. And that's at 79%. So it still is a highly shorted stock, it appears. And at some point, I think a lot of those shorts will buy back their shares of Lemonade. Obviously, they are waiting for the price to go lower. So it's going to be a volatile ride with Lemonade, I think. And, it'll be bulls versus bears, shorts versus longs. The miniature version of Tesla was years ago, but in the insurtech space. And we'll see what happens. We're still bullish on it, medium to long term. Short term, anything can happen. But yeah, we'll see. Yeah. Next question from Peter Allen. Do you expect a sharp drop in ICE vehicle sales in 2022 or 2023, discounting the chip shortage? Matt, what do you think? You want to take a stab?
Yeah, I do. I mean, I've got a lot of people just kind of in my own personal circle that, would love to buy an EV, but they just can't quite get over the upfront, cost disparity. But you've got a couple things kind of trending that are different. One is just you've got more EV options. You've got cheaper EV options. If Elon's to be believed, you've got a $25,000 EV coming out in 2023 potentially. So that, I think that continued price pressure is going to help just to get bigger share, which will help to decrease ICE vehicle sales. But then you got, look at gas prices. I mean, gas prices are well over $3 here where I live. And, I'm seeing all my friends and neighbors kind of complain about that, how much it costs them to fill up. And so I've had so many people just ask me, well, what is it, like, how much money does it cost to like fill up your EV? And so like they don't really believe me at first. They're like, well, no, it's got to be more than like $20, isn't it? No, it's not. So there's so much education. And I think you've got just all sorts of trends coming. I mean, you've probably got in the U.S. a federal tax credit that's going to come out. You've got kind of increased costs coming for ICE vehicles in general because those costs are continuing to increase. The right law is not applying to ICE vehicles right now, but it is applying to EVs. So you got price increases for ICE, price decreases for EVs, subsidies. You've got kind of a general trend towards green energy and clean tech in general. Which I think is still in kind of the early phases of mass adoption, but that will only accelerate. And then, you may have kind of continued supply constraints as well. So I think all those trends are detrimental for ICE and supportive for EV.
Yep. Yeah, I agree. Alec, maybe one or two more questions. We're getting close to the hour mark here, I think. So let's do one or two more. What do you think about Xpeng's robotic unicorn? Oh, man. So, yeah, that just came out this morning, right, Matt? I mean, I just saw a pic.
Oh my gosh. I thought that was like an Onion article when I first saw that.
I was like, is it today, April 1st? What's going on here? Yeah. Yeah. I mean, Xpeng, I think they've been working on this obviously for a while. Like I saw someone comment, they must have been working on this for a while and they're just revealing it. Of course, they've been working on it for a while, but Xpeng knows behind the scene, there's like legitimate, like big companies like Tesla or Apple or Google or Samsung. There's like espionage going on between these companies, like you have leaks at high level, Xpeng knows what Tesla's skunk works are up to some degree. They don't know the full picture of Tesla's skunk works, but they definitely have some inside intel on what's going on. And so they probably knew a while ago that Tesla's working on like this robotic stuff or something, like, oh, we need to be in front of that too. Let's start building ours at the same time so we can hurry up and come out at the same time. And Tesla came out with their, vision before their prototype was even built. And Xpeng's like, oh crap, we better just come out with ours now. That's what I'm envisioning is happening. Xpeng's like, okay, well, we guessed wrong with the dog, and we were going to make a cool horse. They did a humanoid, but at least our cool horse is still cool. So let's just put out our specs of our horse as soon as we can after Tesla's AI day reveal. That's kind of in my head what I'm envisioning. I don't know if that's what happened, but there's certainly, some of these other companies, whether it's Apple or, Xpeng, I would put up there now, and Neo even. Like, I think that they have inside info of what's going on at high levels within Tesla. Probably Tesla's so big, you can't protect everything. They probably didn't have the full picture that it was going to be an actual humanoid, but maybe they had a picture that like Tesla's going to do some kind of robotics, and so they wanted to kind of join in and get part of that bandwagon, part of that hype on their company, vision. So that's my thought. That's my bird's eye view thought. What do you think, Matt?
Yeah, I think it kind of the same thought. I mean, I just saw it and kind of rolled my eyes and was like, all right, well, it's like everyone's going to kind of come out with this right now. I think you had some tweet that Ford's going to have a Mustang robot eventually. It's like it's almost laughable. It's like a marketing ploy to some extent more than an actual product launch. Now, maybe that's my bias speaking out, but to me, it almost reminded me of like when all the SPAC hype was taking off and like Nikola was like super hot in the news, and then GM like wanted to get in on it, so they announced this partnership, deal with Nikola, and it was just like
without even understanding.
I don't think they really like valued them. To me, it seemed way more of like a marketing ploy in like an investor relations ploy than it did an actual kind of thoughtful strategic implementation for GM. So to me, this kind of rubbed me it's the same way, where it wasn't necessarily about like the strategy or the reasons why Tesla's doing it. It's probably not why Xpeng is doing it.
Yeah, I agree. Yeah, a lot of FOMO amongst companies, not just traders and investors. It seems like these companies don't want to be left behind of the next big thing, so they all kind of want to jump in line. And Tesla's been the leader, and they're just going to follow what Tesla does. So, yeah, interesting.
Yeah, it's easier to do that than to kind of have your own unique ideas. But at the same time, you could kind of imagine, if some of these OEMs did introduce like a robot before Tesla did, like, nobody would know what to make of. Like, imagine if GM launched like the GM bot, like just out of the blue. Everyone would be like, "What are you doing?" But now that Tesla's done it, anyone can do it. So it's kind of like, there is a little bit of that. Once somebody has taken kind of that first crazy step, then everyone else can kind of just dump in, and there's not even really an expectation that they'll be successful. It's just a lot of it is like a concept, and like GM has that flying market. GM has that like flying car concept, and it's like they're never going to do that, but they've got like this whole thing, and it's just it kind of, I think it's trying to play into the halo effect a little bit, where if you can at least say you've got these smart engineers who are trying to tackle a hard problem like flying cars or robot unicorns, then that's good things for your brand. I think that's really all it is.
Yeah, no, I agree. I think so too. Well, this has been a good chat, Matt. I think we're at the hour mark, and I think we're starting to get a couple interviews lined up in the coming weeks, so everyone stay tuned. We'll get some, probably not live interviews. We'll do them off hours and release them once a week or something like that. So we'll see what happens, and look forward to doing our next chat next week in the meantime.
Yeah, we got some good stuff lined up, but appreciate the time. Thanks for watching, everyone.
Thanks.